Hello everyone, George here, and I'm bringing you another video uh, pertaining to tax knowledge. And this topic is about a topic a lot of people don't like to discuss. So with tax season almost over, it's time to talk about notice of assessment. So basically, um, when you file your return, the government processes your return, and either they agree with your filing or they disagree with it. Either way, you will receive a confirmation that they have received your return, that they reviewed it, came to a conclusion as to whether they agree with your calculation or disagree with it. So this video is about what happens when you receive a notice of assessment that does not agree with the tax return you filed. Okay, so there's a couple of things that you need to do when you receive a notice of assessment that does not agree with the return you filed, either with the Canada Revenue Agency, or in the case where you are in Quebec, with the Canada Revenue Agency and with Revenue Quebec. What should you do first? We'll discuss about that. Let's say now you have determined what is the change. Now what do you do? And thirdly, what are the resources at your disposal? Where can you get help if you need help? All right, let's go on to the next screen. All right, so adverse assessments, your first step should be it might be stating the obvious, but your first step that you should be doing, and you should do this even if your assessment agrees with the tax return that you filed. Review your notice of assessment. Picking up the form and just filing it is not good enough for many reasons. First of all, you need to determine if the CRA did agree with your notice of assessment, or was there a negligible change? All that information it needs to be verified to be correct and be parallel to what you filed. Now, the other reason why you need to review and read your notice of assessment is because it also contains valuable information. Now, I picked up a screenshot of a sample notice of assessment. Usually this is how it looks like when you receive it in the mail. You can also receive an electronic version of this if you signed up for the CRA's automated services, online services. So basically, I'm not sure if this is a clear enough picture, but let's just go there and see. All right, this is as clear as I could get it. Of course, this is fictitious. It doesn't have a real social insurance number or any of that sort. You don't want to display this information publicly. So you can tell this is from a prior year because it still has the 3 digits, and since then the CRA has moved to a 5-digit system for numbering the lines. So basically, you want to review this notice of assessment because it has valuable information on it. First and foremost, your Rsp Deduction Limit, which is clearly indicated here and how they came up with the calculation. You need to check this because next year it will affect the amount that you can contribute to your Rsp. On page 2, and I don't have a sample of page 2, because the amount of samples you can find on the internet that you can readily use is very limited. Side 2 may contain other information pertaining to what they agreed or disagreed to, your carry forwards like non-capital losses or capital losses, which you can deduct in future years, any carry forward of donation credits, etc., etc. So that's page 1 and page 2 with respect to the other information that you'll find there. The principal information that you'll find there is, first of all, in the first part of the assessment, the numbered in the thousands, is the amount of income that they determined that you actually should have declared if you didn't already declare it. And then in the 2000s section, or the section starting with numbering with 2, is the deductions that they allowed. In the 3000s, or the section starting with 3s, is the non-refundable credits. And what does non-refundable credits mean? It's those credits that you can use to reduce your tax to 0, but it's not refunded to you. And then in the 400s is the determination of the tax calculation and any refundable credits that are owed to you. So all that needs to be reviewed. There isn't a program that will do it for you. This is an act that requires your sight and ears and your cognitive perception. So it needs to be done, so you'll also have an idea of next year where you stand with respect to, at a very minimum, what you can contribute to your RSP. Now, what has changed? If anything at all has changed, it could be any of these 4 possible combinations, right? It could be a math error. Now, if you're doing your return with a certified software, the chances of a math error occurring is very minimal, but we can't dismiss it. Number 2, they've added income that was not readily made available to you. You inadvertently forgot to declare. That could also happen. The other thing that can happen is income can be attributed to you in error. And I've seen that happen once in my career as a tax professional, where the bank associated the bank account with the wrong social insurance number. Lo and behold, when the person filed the return, he had a huge amount of interest attributable to him, but it was not his money to be had. Now, granted, in my 25 years, I've seen that happen only once, but it can happen. The other item that can happen is you were denied a deduction. Now, for one reason or another, let's say you declared an allowable business investment loss or an RSP which you thought you were entitled to claim but you weren't, that will be obvious when you compare your return, and hopefully you kept a PDF copy of your return, to your notice of assessment. What may not be so obvious is if they refute a non-refundable tax credit. And the reason why that may not be obvious is because they probably would show on the notice of assessment the net amount after they multiplied by 15% or whatever the rate might be. There is different percentages for each province with respect to the rate of non-refundable credits that you could actually claim on your tax return. And lo and behold, Yukon and Quebec are on the short end of the stick with respect to non-refundable tax credits, because we in Quebec and Yukon have an abatement. So the abatement has to be taken into consideration when you're calculating your non-refundable tax credits. Now, provided you're in any other province except Quebec and the Yukon, if you want to see if a non-refundable tax credit was denied to you, you take the difference between the net amount you determined and the amount that the CRA determined, and divide it by 0.15. You'll get the gross amount of non-refundable tax credit that was denied, and you can readily find it by reviewing your section for the non-refundable tax credits line by line. What credits could they possibly refute in terms of non-refundable tax credits? Perhaps medical. That pops up often. Donations, and perhaps the caregiver or disability tax credit. All those credits I've seen in the past being refuted. The other thing that can happen is if you're doing your return with a professional, or even by you, they may send you a letter stating that you need to mail in your receipts. If you did not receive that letter and did not respond in the prescribed period of time, they'll deny you the credits. So usually that letter goes out to you by the processing review section. And you have to understand that even if you receive a notice of assessment that does not agree with your calculation, it is not cast in stone, and you do have some recourse, right? Okay. Now, adverse assessment error types. These error types that I have actually picked up by reading a advertisement in a magazine in a doctor's office a long time ago. He had a nice collection of magazines, and lo and behold, I had picked up this magazine, opened it to a advertisement page, and they were advertising a software, a tax software, and the way they position their product is these are the type of errors you can make into on a tax return, and this is how to avoid them. And at that time, it was when technology was being first developed, and accountants were being transitioning from pen, pencil, and paper to actually doing returns on computers. And those facts just stuck in my head for the longest period of time. So, transposition errors. Well, transposition errors can occur when you reverse digits or you inadvertently put a credit as a deduction. One thing that often happens, and there's not much software providers can do, is that if you have a donation from your workplace, or you have union dues, those two amounts follow each other sequentially. You would be amazed as to how many people have actually taken their union dues as a donation, and a donation as a union due. And what happens then is that a deduction that should have given you the value based on your marginal tax rate is given to you at a credit of 15%, and depending on your marginal tax rate, it might be to your benefit or the inverse. So how do you avoid this error? Quite simply is always review your return before you net file it or send it away. Take a break, a 24-hour break, to pause, relax, refresh, review your return before sending it. Omission errors. Omission errors can happen in a number of ways. You inadvertently forgot to get a statement from your broker and declare a certain amount of income. Now, you could tell me, look, there's no way I can do this because I use the services of AFR, autofill your return, where you can download that information from the CRA website. Autofill your return is not perfect either, in two respects. The first respect is the CRA may not have the information at the time that you downloaded it because the provider or the issuer was late in uploading it to their website, or there was a processing delay of that information on the CRA's behalf. Either one can happen. The other error that I see happening systematically with respect to AFR is that the famous T5008. Now, what is the T5008? It's a slip where capital gain or disposition of security transactions is declared. Quite often and not, people might end up having a sizable quantity of those slips, to the effect that it can literally freeze the accounting software or the tax software. But what people often forget is that your broker is not legally responsible to declare the cost of your securities. That falls on your shoulders. Now, if to a professional, let's say you just had a reasonable amount of T5008s, somewhere in the neighborhood of 10, right? Now, hear me out on this one, okay? The person goes ahead and just autofills the return with those 10 transactions, and none or a few of those transactions do not have the actual cost of your securities. What happens then? What will happen then is that the CRA will go ahead and process your return as filed, all right, tax you on your full capital gain, not, well, full up to the 50%, but less any adjusted cost base, any base. And your capital gains, despite being overstated, it will be assessed as filed, but it's still wrong. So you will receive a notice of assessment that matches your return, but because you neglected to take into consideration the true cost of your shares, you are over-reporting income. So that's another example of an omission error, and at the same token, your notice of assessment may agree with your filing, but still you're omitting a cost and overstating your income. Tax theory errors, those are rare, but I've seen them occur both by the fellows that are supposed to assess your return, and in some cases by tax professionals, and even software is not perfect, but they're more rare. They don't often happen, and if they do happen, software providers quickly try to issue a patch in that respect. Now, what happens though if the CRA or Revenue Quebec do give you a credit that you're not entitled to? We'll touch on it later, but of course, the correct answer is send that money back. It doesn't belong to you. Display or optic errors. Those errors are rare, but you may encounter a situation where the overall result is correct, but a certain amount does not appear on your tax return. But it's taken into consideration in the end result, and then everything is resolved rather easily in that respect. Okay, adverse assessments, you determine the change, how do you proceed? Okay, first and foremost, do not panic, all right? You may want to contact the CRA and Revenue Quebec to explain the notice of assessment to you if it is not clear to you what they had written to you in the assessment, right? Now, as you may all know, you may have to wait a considerable amount of time to be in the queue in order to talk to a person that's live. My advice to you is be patient and stay in the queue. Be polite to the person that is helping you, because they're there to help you do your return and assess your liability as per the Income Tax Act of Canada. They're there to assist. Now, this goes without saying that you should first actually read your notice of assessment and try to understand it. Try to see what change actually occurred. Now, if the change was not warranted, yeah, go ahead and call the CRA and Revenue Quebec. I've been able to successfully resolve issues with both level of governments, mostly sometimes over the phone. They in turn may ask you to file a written letter requesting a change or an adjustment request. That too, I highly recommend. Okay. Now, your last recourse should be to file an objection within a prescribed period of delay. In other words, Now, off the top of my head, I do not know the exact period of time that you have in order to file an objection, and you can find that readily on the CRA website. But keep in mind that this should be your last recourse, because it is a legal action that can escalate to tax court. You want to avoid going that route if you can resolve it by either contacting the CRA or written correspondence. Going back to the objection, you do have a prescribed period of delay. You need to be confident and be able to state a subsection or a section of the Income Tax Act pertaining to justifying your credit deduction or your position with respect to filing your return. And it is a legal document that you have to file. Literally, it's on legal paper. You should consult a lawyer or an accountant before filing an objection, unless you're absolutely confident that the CRA has made an error. On that note, I'd like to tell you that I've seen recent graduates of law and people with degrees and masters of tax come to my office with the Income Tax Act, and they're confident that, hey, this is what the act tells you. This is what this interpretation bulletin tells you. Ladies and gentlemen, if that act was perfect, why do we have tax courts? Number one. Number two, why do we have appeals to tax court decisions? And why do matters escalate all the way up to the Supreme Court? There are gray areas. So if you do want to go through the course of an objection, make sure you understand the implications of what you're doing, or consult a professional like a tax lawyer or an accountant. Contact your software provider. Why not? Now, with UFile, you do have a means of contacting your software provider and sending them an anonymous extract. I demonstrated that in my last video. For people that purchase the premium product, we have this service where, we give you a little bit of extra help with respect to figuring out all these complications. Yeah. I wish I could ask you questions at this point in time. I'm used to actually talking to live people, but anyway. Some of the resources that are available to you on the internet. Okay. The CRA website in Revenue Quebec, you can find different, back in my day they were called interpretation bulletins, now they're called income tax folios. Revenue Quebec also has a wealth of information. I think globally, in terms of tax collection, Canada and Quebec have one of the best systems, where we are very transparent about the Income Tax Act, the rights of the taxpayer. Our competent authorities go above and beyond to make sure that we have all the information available to us. There is a couple of free resources that I typically consult. Canly 2, and Canly 2 is excellent for finding case law with respect to tax matters. And if you enjoy that type of reading, I highly recommend that you do it. And I'm going to provide also the link below. My esteemed colleague, Jerry Viteratos, and I believe also Ida Celli, they go through the trouble of providing UFile Taxing You and a blog, which you can consult for valuable tips, tools, and videos. So I highly recommend that. It's really a highly visited site, and they go above and beyond, really. All right. Next, summary. Right. If you receive an adverse assessment that does not agree with your results you found, first and foremost, do not despair. You do have a recourse. You do have resources. You do have that notice of assessment that contains a wealth of information. Okay, and even if your assessment is in agreement, right, you still need to consult that document to make sure you know your RSP deduction limit for next year and whatever carry forwards the CRA has taken into consideration in assessing your return. All those elements are important in planning ahead. Okay, good. Now, do not post your personal information on social media platforms. I know there's a lot of people out there with the knee-jerk reaction of posting their personal question as it pertains to their personal situation on YouTube, Facebook, whatnot. My suggestion to you is go through the route of going to that help and click on that support assistant. And if the initial email does not answer your question, answer back with a short description of what went wrong, perhaps a PDF copy of your notice of assessment, and you can blank out your social insurance number and send an anonymous extract of your U-file file to our support department. They're inundated with work, but they'll get to you eventually, okay? Try to determine the reason of the change yourself, or get confidential support, right? Okay, so we kind of briefly gave you an overview of how you can read the notice of assessment to determine what was the change, right? Establish that first. Once you've established that, right, with a calm mind, you know what further steps you can take, right? We discussed calling the CRA, writing a letter, or if need be, consulting a tax lawyer or an accountant and writing a notice of objection, unless you're confident doing all that yourself. Now, challenge the adverse assessment, pay the debt as quickly as possible, or return a refund not owed to you. So I'm circling back now to what I discussed before, where the other error that can occur is not necessarily an adverse assessment where you have to pay more or you get less of a refund. The opposite can be true as well, right? You could very well receive an amount in excess of what you determined, right? And that excess refund may be incorrect. Before you cash that government check, you need to ascertain that that money was indeed owed to you, okay? Or do I have to return it? If you are honest enough to report this error, you have a better chance of fighting any interest and penalty, right? That error was not mine. I duly reported it. Here's your money, and I can sleep at night. The other clandestine adverse event that can occur is with the example of the capital gains. Ladies and gentlemen, it is very important that you keep your investment summaries that record your purchases and your sales. That's the only way that you can determine the true cost of your shares, right? I know now that brokers do not mail summaries as they did in the past, but they do PDF those copies, so that's even better. If you keep a PDF copy on a secure drive, password protected, make sure you use a reputable password manager so you don't forget the password and lose all your data. That's an immense value. That's the surefire way of knowing that you're not over-reporting your capital gains income. And if for any reason the CRA or Revenue Quebec challenges the cost of your shares, you have proof that you can provide them, and if they don't buy it, then with that proof, an objection would be warranted if they subsequently refuse it. Now, the other thing I have to mention about shares is that sometimes those assets change names or they've been transferred from one brokerage to the other. So having those statements and being able to trace back to the original cost of those shares is an immense value. Record keeping will help you challenge any adverse assessments you may receive. Yep, so that concludes our video. I hope you found information here useful. Thank you for watching, and if you have any questions, general questions I hope, feel free to ask, and thank you for using UFile. Take care. Oh, before I say goodbye, I should have said that in the beginning of my video. These views do not represent do not necessarily represent the views of my employer. They're my own. Number two, I am doing this video on my own time because I enjoy sharing my my knowledge with people. And thirdly, this is not advice. It's strictly for instructional purposes. And hopefully we've all learned something. Take care.